Welcome to TradeTheNBI.com. This is Jonas Reporters for the 24th. Well, the war came, the war ended. We have a ceasefire, and yeah, everything has been returned to normal, and all the panic was for naught. And, this is where there's constant miscalculation, people listening to the media. The options for the Iranians were limited in this particular case. They could begin a protracted situation that and have the stability to do so. They'd lost all their proxies in both, Israel as far as West Bank and Gaza Strip, Beirut. The Israelis had moved in. Syria had collapsed. Who do they have left to work with? So everything was just going to be a bunch of long distance bombing, and obviously they didn't expect the U.S. to be so decisive in its move. And everything goes back again, and they can start over. So they've lost some valuable expenditures and they'll start over. But the market, obviously, we saw the magenta making its turnaround the other day. And here, once we were outside of that DOC with the orange inside, the continuation pattern had already decayed at that particular state. And so that drop off here with the cross of green was all nice setup there, and now an improved shakeout potential developing on that. S&P looks set to get towards the highs again. NASDAQ pretty darn close already. Just a little bit more to go, and also performing quite nicely on that, but it had a stronger reading from the start anyway. So the situation was a little bit different in general. Treasuries, of course, no action. The Fed is AWOL on this. They're still waiting for the inflation from the tariffs. Yeah, oil. Look at that. We knew this would be the case once that risk factor died off. What do you have left? Excess supply. Even with the small crude draw that took place from last week of that, you're still looking at production rates that are going to exceed relative demand unless things pick up. So, yeah, that dropped right back into the midline. Still elevated. Don't get me wrong; it's still way too high. But if this can come down into that low 60 range in the next few days, then you're not going to have any serious inflation impact. It'll be just a little transient blimp, their favorite word. They love that. Super strong for the euro because that saves them. They're not going to have to spend every penny buying oil. This was, of course, their didn't matter. The euro was going up anyway because they're trying to support it because they really want to show that the dollar is in trouble, blah, blah, blah narrative. And they're still selling that one pretty hard. Gold, that this is not great for gold because obviously now you don't have conflict, you don't have inflation. What's the point there? It was great for Bitcoin and that trading, same as Nasdaq there in this particular case, moving up nicely and right back in line. Weathered the spike of the NBI weight with the nice magenta cross back over and all set to go there. Still a weak shakeout, so it's got some work to do. But if it does, you're looking at new highs for Bitcoin coming up. A little bit down the road there. Much worse from an ETH standpoint, so it's got more to recover, but it also had caught up to where Bitcoin was, but still relatively behind. And so, from a 50K standpoint, we saw that the magenta took over on the brief dip that it had to the 50% with the NBI weight lead from there. And once that turnaround took place, it was all off to the races, and nothing has changed at this particular stage. To 2 for the NBI weight, that's not going to produce much short. Yes, positive extreme, so some of the froth will fade off later on, but not at this particular stage. The excitement from war ending, and call it the no war benefit. We look at it from a 5K standpoint. Started early on in the morning, and then, of course, they faded off. That brought in a whole new level of shorts and puts, and that allowed the call buyers to turn it back on, and they were the ones that are reaping the benefit from this. And even when the open comes, they will be in a great spot. The question will be whether they hold on to it or cash out. And that really begins to tell you the carnage that has taken place. If there's the cash out, you get the quick selling, then you know that people have been hurting. They're trying to, guarantee lockup. But if they think that this ceasefire is going to hold and they have their assurances from their inside men, then you're likely to see a continuation of it because if they don't liquidate at all, then you're just going to get a continue to push higher because there's certainly plenty of resources available for all the people who sat on the sidelines now and are caught in the wrong direction, particularly all those who went, long oil at the peaks and stuff. They're getting hammered pretty hard at this particular stage. So all good stuff, and we can rejoice that there's partial peace. It's got the Russia-Ukraine situation, which isn't going to change anytime soon. So that becomes the standardized norm, and it really hasn't impacted the broader market. So as long as that remains the same, one less hotspot to deal with, and things get back to focusing on the real economic numbers that come through. And I think that's still going to be a muddled case because you still just have too many blockages in place that aren't allowing the free flow of growth capabilities. So we'll see how that starts to transition, but we'll continue to follow it. And the reading's been pretty clear with it. As always, anything relevant, I'll put it on the team chat. Have a good one.